Hi, good afternoon, everybody. Welcome to Funding a Better Future. This is a new series of bite-sized episodes featuring expert insights from ClimateTech investors. My name is Cherry. I'm the founder of Above and Beyond Recruitment. We partner with ClimateTech startups and we help them to scale and grow their businesses, either by recruiting for them and helping them to build out their teams, or by offering talent advisory and consulting services throughout their growth journey. This series is aimed at founders and leaders of climate tech businesses, and particularly for anybody who's looking to raise investment this year. Throughout the course of the next few episodes, we aim to give you a realistic picture of what the current investment market looks like for climate tech, as well as some tips to give you the best chances of fundraising success, and hopefully a network of contacts that you can approach when the time is right. Today, we are joined by Florian Schabus from Planet A Ventures. Planet A is an impact investor with a difference. They're the first European VC that has an in-house science team which calculates life cycle assessments to truly quantify the impact of a startup. They pride themselves on investing in bold and brave founders who are going to be the heroes driving our green transformation, and they help them to build out scalable businesses, because they really believe that when founders profit, the planet profits too. And it's great timing to have Florian with us because last month, Planet A announced that they'd closed their first fund of 160 million euros to support European startups, which is fantastic news. So Florian, thank you so much for joining us today.
Yeah, thank you so much for having me, Cheryl, and thanks for the nice introduction. Super happy to be here.
Are you happy to kick off, Florian, by sharing a little bit more with us about Planet A, how you operate, and what kind of sets you apart in the VC market?
Mm-hmm. Absolutely, super happy to. I think you already gave a good framing. So we just closed our first fund last month. Super excited and happy to explore European ecosystem and invest in climate tech founders. We're based in Germany, but we're investing across Europe, and really, as you said, looking for founders who tackle the big problems and who kind of like really develop scalable but also systemic solutions to the problems that we're facing environmental wise. And as you said, we do that a bit differently than a lot of the other funds in the sense that we have a science team on board, and we really calculate quite extensive impact assessments for all the investments that we do, using life cycle assessments, which really give us a quantitative data point of the impact as a, let's say, second perspective next to the business perspective. And we use that impact-driven view or perspective as a way to, first of all, identify founders, but second of all, then support them along the journey. Because if you have a good and comprehensive overview of the impact you generate, that's very, very helpful down the line with recruiting, marketing, but also communicating that impact to other investors. So we found that to be very, very useful for our portfolio companies, but obviously also underlining our investment thesis, which is, if we identify the companies that create the most impact, then there's also very, very strong correlation with the financial returns that are linked to that. If a company is actually creating real impact rather than greenwashing. And within that, we obviously try to have a very holistic view on things. So instead of just optimizing on CO2 emissions, we incorporate also other dimensions such as waste reduction, resources, but also biodiversity concerns in those life cycle assessments that we do to really have a holistic view on the impact. We always try to think of in terms of planetary boundaries, and then CO2 emissions is one of them, but we're also facing a biodiversity crisis and other issues. So we really, really hope with the investments that we do to contribute as much as possible towards those as we can. Have done 15, 16 investments so far across the board, really looking at anything from renewable energy to manufacturing, sustainable chemicals, all the way to agriculture, carbon markets, and the more nature-based side of things, always with a view on where we can have the most leverage with our investments.
Fantastic. So that's a real breadth then within the portfolio, but all driven towards like maximizing impact.
Absolutely, yeah. I mean, it's our view that if climate tech is not a vertical or an industry by itself, right? We rather view it as a a layer which goes across different industries, and we have to basically decarbonize our whole economy, right? So in that sense, every industry and every sector is affected by that, and yeah, we're trying to tackle there as many different problems as possible.
Superb. And so we'll kind of ask 3 questions of all of the investors that are joining us across these series. So I'll kind of go into the first one of those now. And that is that I think macroeconomically, we've had a few challenges over the last few months, right? And I know definitely a lot of the founders that I speak to, there's definitely an air of nervousness about what that funding landscape looks like for them as early stage founders this year. So I wonder if you could share your perspective on that, Florian, and how optimistic, I suppose, you're feeling about the state of climate tech investment in 2023.
Absolutely. Yeah, I mean, there's a lot of macroeconomic trends over or events that happened over the last few months, which might give you a sense of pessimism for climate tech. But to keep it short, I think overall we're still very optimistic and positive because we're long-term investors, right? And I think if you see those more short-term issues that we've seen, for instance, also with Silicon Valley Bank now, there are obviously challenges. There's obviously increased challenges and obstacles, but only speaking for ourselves, that's not influencing so much in the way that we deploy capital or invest in founders, because we clearly see that the long-term opportunity within climate tech, and that is not changed by those, let's say, circumstances, because none of that made the climate crisis go away, and the energy transition and, let's say, the pressure and need to decarbonize around our industries is also not affected by that. So I think, speaking for us, it's not affecting the way that we're investing, or in any way slowing down the investment pace that we would have. But obviously, it changes a bit the funding landscape, in the sense that it overall definitely became a bit more challenging for founders to fundraise. I mean, that's definitely something we've seen in the market. I do think climate tech is less affected by that than other sectors, for sure. Because I think, as I said, because of the long-term trajectory and just the need for climate tech, but also it proved itself to be a bit more recession-proof than other sectors. I think part of that came from the fact that the energy crisis definitely gave a big boost to climate tech investing within Europe, especially within the energy sector, where energy efficiency measures and also shifting to alternative energy sources also didn't only come with a sustainability aspect, but also came with political independence and geopolitical concerns, and also a huge cost advantage, right? So I think that's why we overall remain very optimistic. Likewise with Silicon Valley Bank has been one of the largest funders of climate tech companies when it comes to non-equity instruments. But we even that, I would say it's more of a short-term issue, because long-term there's just a great opportunity to support those companies, and we really believe it's the biggest investment opportunity that we have over the next decades. So we will see other players emerging and taking that spot. Besides that, I think the follow-on financing for climate tech companies has, anyways, at least in continental Europe, been an issue before, and I think through that maybe it gotten also more exposure and more public awareness. That's something we have to work on, because the fundraising for climate tech companies, particularly hardware companies, does not follow exactly the same trajectory as you have in classic VC, where you raise an equity round and another equity round and then another equity round. But most of those companies likely need a different capital stack than going forward, where there's a proportion of debt or project financing in that. And even before the Silicon Valley Bank collapse has not been properly in place in Europe. I mean, it's emerging and things are happening, but we're nowhere near where we're supposed to be. So I would even see a positive aspect to it, in the sense that it raised awareness that there is a certain gap in the market, and that we need to fill it faster than it had been happening before. But bottom line, I would say it's more challenging. Things take more time, but I don't see in investment volume reduced that much. And I think, speaking to other investors as well, overall, especially in the early stage market, everyone remains still very bullish in the opportunities. And if you have a great business, then funding is no more or less difficult than it would have been maybe a year ago, I would say.
Good. Well, hopefully that will offer some, much needed reassurance perhaps to some people out there that were feeling a little nervous about what the market might look for them this year. And you mentioned earlier, Florian, that you very much see climate tech, right, as being almost a layer sitting above lots of different areas that need decarbonising and need addressing. Are there any of those particular subsectors that you or the broader team at Planet A are particularly excited about this year?
Mm-hmm. For sure. I mean, in general, as I said before, we're really looking to decarbonize our economy. So on a higher level, I think the bigger the problem in an industry is to decarbonize, and the more difficult it is for incumbent players to do that, I think the more opportunities there are for startups. Likewise on waste production, for instance, when thinking about packaging, etc. So I think if you look at it from a problem perspective, wherever it's more difficult to shift to sustainable options, there's more opportunities for startups. I think on a higher level, that's kind of like a bit of a framework that we use, or that I use, and within that, I think the opportunities or the problems are countless, right? I mean, we're not making as much progress in the energy transition as we should be. We're also decarbonizing our industries just takes a lot of time and a lot of investment. So overall, I'd say we're bullish about nearly every single sector that within what you would consider climate tech, yeah, but looking for cases which really also make economic sense for customers. I think it's from a macroeconomic perspective, companies don't buy something just because it's sustainable. I mean, so really looking for cases which offer cost advantages, or at least a clear path to price parity by scaling and bringing technology costs down, or offering value proposition in other ways, right? So and finding kind of like customer segments that are willing to pay for that. And if it comes about specific subsectors, I mean, there's a lot I could mention. Probably we are and have been always very excited about the chemical industry. There's a huge need to decarbonize there, and it's very, very challenging, because basically a lot of our daily lives is based on hydrocarbons and fossil based products. If you look at all the day-to-day products you're using, from the fuel for your cars and the chemicals that make up your day-to-day product. So we see big opportunities there to really help have companies decarbonize. For instance, did one investment in a company which is producing green methanol, which is one of the most promising ways to decarbonize shipping, for instance, because it's very, very hard to electrify large freight ships. So they need other alternatives, and they basically developed a new catalyst to produce green methanol at scale, cheaply and sustainably, and they need as an input, CO2 and hydrogen. So I think the whole green chemical space is something we look into quite a lot. Also, when it comes to decarbonizing heavy industry, cement is always a big topic. I think even when I heard the number initially, I was surprised that cement is responsible for over 8% of global emissions, right? And it's actually the material which is most widely used after water on this planet, which is just tremendous if you think about the scale of the problem. And it's very CO2 intensive, the process of producing cement. So to shift to more alternative, or to more sustainable alternative cement production through new materials, through increased efficiency in the processes, but also through carbon capture in the existing plants. So there's different ways of tackling that. But really excited about, I mean, yeah, that's going to be a mix of solutions. So really excited about different fields within the cement space that can really have scalable impact, and also reduce costs for the cement producers, which then is always a very strong value proposition. So that, I think, is the second topic area I would highlight. And there's a third topic area. I mean, it's an ongoing topic. Of course, it's the whole nature-based solutions and also carbon removal side of things, because as I said before, we tend to look at things very holistically, right? And one of the things that we need to do is protecting the natural resources that we have, and really stop deforestation and make sure that we protect the natural environments that we still have, both from a CO2 perspective, because they're large CO2 sinks, but also from a biodiversity perspective. So the whole carbon market and climate finance topic is still something that we extensively look at, and see a lot of problems in the market, right? Because it's a very intransparent, very opaque market, and there's a lot to be done to really ensure quality and integrity in the market by developing measurement, verification, reporting solutions, by really cutting out a lot of the middlemen in the market, and by really making sure that we channel more financing to those nature conservation projects that are very important. Likewise, on the carbon removal side, I think, the decarbonization is one thing, but all the climate models that we base our assumptions on, they all already have quite strong predictions on carbon removal built in, right? So at this point, it's not a question of, we might have to remove CO2 on top of decarbonizing our economies, but it's more of an imperative, actually, that we have to scale up the carbon removal industry. Which is a huge challenge, of course. I think someone told me that, based on the climate scenarios, we basically have to rebuild the entire oil and gas industry to remove the amount of CO2 we need to remove to build up or to reach our climate goals. So that basically means that it's a tremendous challenge, but also, creating lots of opportunities for companies to find very cost-effective, energy-efficient ways to remove carbon and store it permanently. So I think that's also something we look into quite a lot, and hope to see more companies in this space emerging, and more technologies coming up that address some of the challenges you still see in the market. So I think that's some of the topic areas that we have an increased focus on at the moment. Beyond what you would usually look into, scaling up renewable energy production, with that also ensuring more sustainable mining practices, because I think, as a lot of you guys might know, but our energy transition take up a lot of minerals and metals. Also decarbonizing and having more sustainable mining options is something we're excited about, and obviously food as another topic area. So, I mean, as you see, it's very hard to kind of narrow it down.
So many problems and so little time.
Topic areas, but I think and within that, there's just too many things to work on.
But no, that's a really helpful starting point. So chemical engineering, chemical manufacture, carbon removal, nature-based solutions, and then decarbonising heavy industry as being kind of core areas. And there are certain kind of stages within a company's journey where you feel you're the best fit as an investor to get involved?
For sure. I mean, so we invest across pre-seed to Series A, with slight differences between software companies and hardware companies. So we feel, very, very comfortable getting in very early in with software companies, because that's also where our background lies and where we can really add value from the get-go. Whereas with hardware companies, we prefer or tend to invest a little bit later, since we are obviously not a dedicated deep tech fund. So we probably could not support founders in the best possible way who still have 2 years of R&D in the lab in front of them. So within hardware investments, we tend to look at a little bit higher of a technology readiness level, so more around 4 or 5, where there's first proof points in the lab or at a smaller scale, and then it's about building a first bigger pilot facility, and then really getting out of the lab and scaling in at least or up to until like first industrial scale plants. So I think that's definitely where we with the network that we have and the experience that we bring in, add a lot of value. And for software companies, definitely a bit earlier. And within that, as I said, we have a strong network in industry and academia and science that we have in the background of Planet A that is supporting us, and obviously the portfolio founders. And beyond that, have our own platform team who support with things such as branding or talent and hiring, and connect the founders to the right people there to really also help with those challenges that you face in the early stages.
Brilliant. So that investment, but then that help with the journey and the scaling. And what advice would you give to any founders that are listening to this today who kind of fit into those areas, right, as potential interesting investees for you? What advice would you give them to kind of give themselves the best chance of being successful in raising investment this year? I mean, when you're kind of looking at a prospect company, you mentioned impact being very important, but outside of that, what else are you looking at, and where can they kind of pull some levers to make themselves as attractive as possible?
Mm-hmm. Yeah, that's an interesting question, and I don't think there's like a one size fits all answer to this one, because obviously every company has its own kind of like background and its own kind of like story to it. So, and I'm a bit wary of let's too over generic advice, but I'm trying to come up with some useful points that might be helpful. I think when approaching fundraising, from especially if you're a first-time founder, it can be very scary, because you don't know how this world functions, and what the do's and don'ts are, and VC to some extent is still a bit of a closed circle where there seem to be certain conventions that one have to follow. I mean, I guess as an industry, but particularly as a fund, we try to really break this down as much as possible, right, and make it also easier for founders who might not have serial funding experience, or who might come out of academia, as easy as possible to get for that. But still it's a challenge, of course. And what I would say, if you approach fundraising, right, I mean, it in the end is a conversation where I want to learn as much as possible about your technology, and it's not this Shark Tank style situation where you have to pitch in front of me, and it's like this very dramatic kind of like setting. But it's really an opportunity for the founder to showcase what they're working on and help me to understand what they're building, because obviously we're not experts in everything, and we just want to learn as much as possible about what you're building. So see this more as a, maybe not co-creation, but certainly like more of a conversation where we just want to understand more about what you're doing, and then seeing if there's a strategic fit with what we want to reach and the value that we can provide. So that also means that it's very conversational, very network driven, and I'm sure you have, or most founders will have someone in the network who can introduce them to founders, or help them screen the market a bit, and seeing who could be a good fit, and then really start engaging with conversations. And there's no too early in that sense, right? I mean, even if you just want to reach out and just have a chat about certain things, and you might not be fundraising yet, then just definitely do that, because all the feedback that you will get along the way from different investors, not everything will be valuable, and maybe a lot of it you can discard, but a lot of it will also be hopefully helpful in the way you pitch and present your idea. So I think that is the first advice on how to approach it. And then in the end, I think when it comes to like the criteria, or what we would be looking for, I think there's also do some homework and seeing what the funds really put on the website, what maybe other founders say about them, because we all have different ways of looking at things. For instance, at Planet A, as I said before, we have a very strong impact perspective through the LCAs that we calculate. So it is our, let's say, ambition to really fund the most scalable and most systemic solutions to problems, which means that we sometimes have to turn down founders who build great companies, but just might not be the exact type of impact that we're looking for, right? Which is not then to say that's a bad company, it's just not our fit. I think that's useful to know what the others are looking for, I would say. So that is a very first advice on how to approach it. And then on the other things, I think it's a mix of different things, right? I mean, if you're a first-time founder looking to raise a pre-seed round, obviously you don't have to have everything in place, right? And we know what to look for and what not to look for. But besides the impact, the team is definitely the second big factor that we look into. And what we see there often, especially with companies with teams coming out of academia, is that, you know, do like a humble self-assessment of the skills you have on the team, and really see if a founding team is actually complete, or if you might be lacking someone, right? I mean, I think that's a problem we see over and over again, that teams might not just have the skill set that they need to succeed in that particular market, because you know, it might be that they need someone on the sales side or commercial side because it's really challenging to sell into that market, or they might just lack someone with engineering skills to actually help them build the prototype. So I would say, you know, doing like a realistic self-assessment of the skills that you bring in and what you might be lacking. I think it's very, very important before approaching VCs, because I think very few funds would invest in teams that don't have let's say, the complete skill set that it needs to succeed in that market. Obviously, a lot of it you can buy and you hire, but certain key things just have to be present in the founding team for us to invest. That's two. The second thing, and then I think as a third thing, you know, we're not experts in the technology, so and when you present it to us, you also have to show us the market opportunity, right, and show a bit creativity of what the long-term vision behind it is. If you know, that's something we see oftentimes when founders have great technologies and they worked in a lab for the past few years and they developed something amazing, but connecting that innovation that you have to a real problem in the market requires some more work than just building a technology, because then you really have to turn the technology into a product. And I think that's something we see a lot of founders struggle sometimes. And there also links back to the team question, right? So maybe you need someone who can bring that skill set in and really find the product market fit, speak to as many customers as possible to really understand the problems, see what they're looking for, and see how you can really connect your technology with a problem in the market, and then you have a product, and then you can start selling. And I think that's sometimes a challenge, or that we see when you know, when founders don't really have that in mind. Then they pitch us a great technology, but obviously we want to invest in a great product in the end. So we obviously can help in that transition, but the further you are there, the better. And yeah, with related to that, there's also the question sometimes that we get from founders of, you know, how they can show that there's actually a need in the market for that, right? Especially if you work on deep tech innovations, or maybe hardware companies where you might be far out from commercialization. But there, any signs of you know, customer need is really helpful for us. Any kind of POCs that you've run, any kind of LOIs that you get from companies, you know, literally any proof point that there is a need for the technology, and also that you have done your homework, speaking with a lot of customers and segmenting the market is helpful for us to evaluate. And yeah, I think that as a quick overview, but I think
that's really helpful. Thank you, and I appreciate it was a big question, so thank you so much for the detail that you gave there. But yeah, so being able to prove that there is a commercial opportunity beyond just an impact opportunity, that you've got a really solid founding team that covers the full breadth of skills that you'll need to take that company forward. And then I really liked that advice you gave there, Florian, at the beginning about how you don't necessarily need to wait until you've got this final polished pitch to go and Shark Tank style approach investors, but that it's a series of conversations that you can actually start before you need to have them, and build those relationships and that network over time. So that's so useful. Florian, thank you so much for your generosity, both with your time and with your knowledge and experience today. I massively appreciate it, and I'm sure anybody listening today will as well. Thank you everybody as well for joining us today. If you've missed any of our previous episodes in the series so far, we've spoken to Forward Investments, Nomia and AO PropTech over the last 2 weeks alone, and we're going to be coming to you live every Wednesday and Friday lunchtime for at least the next 4 weeks, hopefully bringing you a wealth more of climate expert insights. So watch this space. Thanks again to Florian, and thank you to everybody watching. Have a lovely weekend.